Welcome to this video, which is on Sunday, March the 19th. What we're going to be doing today is looking at how to work out how much the news, bullish or bearish, is discounted in a currency pair to give advance warning of a turning point or an entry point. Now, in terms of this, we're going to be looking at the CFTC net traders on a few pairs, and for those of you not familiar with the CFTC net traders, you can click get a full explanation in the video beneath this video. So there's a link underneath the video is what I meant to say. Now, in terms of when you watch that video, you'll understand why we always want to trade with the smart money commercials. Now, in relation to the setups I want to look at GBP USD, and one that I actually also consider to be probably my favourite trade setup at the moment, which is hopefully going to come to fruition, which is GBP AUD, which I think has got really fantastic upside potential. I also want to look at USD JPY. Now, those three pairs we're going to look at in conjunction with the CFTC net traders. The fourth pair I want to look at is Euro NOK, which I mentioned in the weekly forecast and saying, to come in and sell the price spike. Someone saying to me, you have a very aggressive entry on that. How did you decide to come in so quick? Well, it's all to do with what I consider to be a double whammy in terms of news. So I'll explain that setup as well. Now, in relation to our last CFTC net traders video, we were looking at AUD USD short, USD CAD long. They completed USD CAD just under 300 pips profit. AUD USD was about 50. I thought we'd make more out of AUD USD. Now, I'm not going to go through those formations today because they're the same really as last time in terms of how I view them. The bounce in the AUD up towards 77 is a sell, and we have the CFTC net traders at the commercials on our side. USD CAD dip we viewed as a buy, so we're back short the AUD USD, long the USD CAD. So today we're going to look at a few different pairs, including my favourite at the moment, which is GBP AUD. So first of all, let's go through the charts, and then I'll be back to sum up with some other comments. First chart, GBP USD. GBP USD daily chart. What we're going to be just looking at here is movements in the CFTC net traders positions. We've got three lines. We've got the blue line, which is the smart money commercials, hedgers. Then the center line is small speculators. It's totally irrelevant for what we're doing. And then we've got the green line, which is non-commercials, which are really large speculative funds. Now, in terms of the positions, what we're going to do is compare the commercials and what they're doing against the non-commercials, the speculative funds. And what we notice on the left, if we go across, once we get below 123, you can see the commercials start to pick up buying. And then once we get towards 122, they start to accelerate even more. Now, that is a warning sign that there's going to be a turn in the pound for us. But what we need to do is see how they line up against the non-commercials. We want non-commercials, the speculative funds, going against the commercials, and they do exactly that. They accelerate their selling into the 122 level. Now, what I want to do now is just switch to another chart. I'll just show you how we timed this move and where we think we could be going. I'll show how we timed entry in this pair and where we think it could be going. Now, we did note on the other chart we had accelerated commercial buying below 122. It starts as we get below 123, speeds up below 122. This red candle finds support 121.50. This one does as well, and this one. Okay, and this is the third one we like the look of. We think, because the volatility has dropped, we should get a counter move. So we want to come in above the high. We're going to do it at 121.80. We get a nice blue candle up, then a red candle down with a tail that goes through support. Now, I've said it in numerous videos, never have your stop where other traders are going to put theirs, and you're going to get a stop cluster here for pound longs because you've got quadruple bottom. Now, in terms of, from our perspective, we want our stop a little bit back. Yeah, if we're confident in a trade, we don't want it near other traders. So we elected to put it back at 120.80. So we're risking 100 pips, but we think the 121 level, it's a round number, very psychologically significant. We don't think that's going to give way. It doesn't come back above the level, then a nice blue candle up. Because of how heavy the commercial buying was, we don't think this 123 level is going to hold. It doesn't. It goes up, gets above the 20-day moving average as well, and comes into 124. Now, I was saying on Friday morning in the member centre that we'd bank 50% out straight away into 124, so we'd bank 220 pips, and then just leave the other half run. If we get above 124.30, we think she should run onto the upside. Of course, we don't close above 124.30, so come out at 124, so it's 220 pips basically, which is a decent enough profit. Now, I do think that the pound has got more potential upside, probably up to 125.50, maybe even 126. However, we've got a decent move. I want to see how things go next week, so we'll update on Monday. Probably look to come in through 124 on a dip back to 123. Now, in terms of the pound, I'm bullish, okay? But I'm also bullish of the USD. So this pair might not offer the best profit potential or the best risk reward. So I want to look for another currency to trade the pound against. And the one that catches my eye at the moment is the GBP AUD. So we're just going to move and look at that chart. The British pound Australian dollar, and we're starting with the weekly chart. Just want to get the bigger picture, okay? Now, in terms of the net traders positions, you don't get them in the crosses, okay? So you basically have to work it out for yourself. But what you can do is you can look at the GBP USD, calculate what the commercials and non-commercials have got, and then look at AUD USD, calculate what they've got, and work out the ratios of, you know, how bullish or bearish they are. Now, I've done it here. Commercials have over 7 to 1 in terms of longs over shorts, okay? Non-commercials hold over 5 times as many shorts as longs. So you've got the commercials, yeah, very bullish with a lot more longs than shorts, and obviously the non-commercials bearish, and both groups have accelerated their buying and selling this week. Now, in terms of the chart, I just want to illustrate the size of the pound sell-off, really. I mean, we've got this Brexit candle here, then you get the follow-through. Now, in terms of these 3 candles here, I think, if we look across the chart here, we've got resistance here. I think this is a level that could be targeted, so just above the 170 level. Now, in terms of support, we'll support here at 160, okay? And then the candle I see significant, which would actually negate our bullish view, is this one here, below the 159 level. So if we close decisively below 159, we'd have to basically respect market action. I put the flash crash sell-off here, this candle and this big tail. I don't consider that important at all. This tail occurred within a matter of a few minutes. It was just an aberration, so not significant to us. This one is. This level here, obviously 160. We've come above the level. Now, in terms of these candles here, they're all pretty small in terms of the volatility is not high. I think the downside pressure is now going to abate, and we're going to see a move up towards 170. Incidentally, obviously this is my target at the moment, but in terms of this year, I wouldn't be surprised to see the pound back up at 185, back up here. But if we got to the 170 level, I think we'd be very happy. Now let's just look at the daily chart and see how we might time this move. GBP AUD daily, I've drawn my target up here at 1 170. You could argue 171, of course, but we didn't really hold above the level. So, yeah, I'm sticking with 170. Of course, if it did get there, I'd be more than happy. Now, in terms of support, we noted that 159, we don't really want to see a close or a decisive close below that level. Come across here, see the red candle comes down, you get a little poke through to go and test 159, and then we move back up above 160, so above this candle here. Now, if we look at how the candles have been over the last few weeks, they've started to get pretty small. Volatility has started to drop, which, yeah, when volatility drops, we're normally looking for a big move, and obviously from our reading of commercials we expect, we think it's going to be to the upside. And the 20-day moving average has pretty much held the GBP since February. I mean, if you look back here, one test, two tests can't get through, that one fails, this one fails, this one fails, this one tries, can't get through, this one just gets above, comes back through again, another test, another test, another test, and another test. Right, this candle for us is pretty significant, and I think, we've obviously come above 160. We're just settling below 161. If we decisively take out this 20-day moving average, I think we'll be going up. And if I just do that, I think, sorry, the line isn't too straight, but you can see what I'm doing here. So I think we just go through the level, and then we should go up to, before we get to 170, of course, we've got a level at 167. So what we can do is we can see how things go as we get up to this level, and then hopefully eventually we'll get up to this level here, the 170 level. Now, in terms of the way the commercials and the speculators are positioned, I see all these candles here, any resistance levels being taken out. I mean, obviously we'll see, but above the 20-day, 161.41 at the moment, I think, something like 161.60. And then the stop has to be back, in my view, below the 159, well clear of that level. And what we're looking for, if we do break to the upside here, is for volatility and follow through buying. So that's how we see GBP AUD at the moment. We're looking hopefully for a big move to the upside. Also, if we come down towards the 159 level, let's say we were to get through it, which I don't think we will, but of course we could, we'd probably look to come back through that level. But as I see it right now, I think we decisively take out the 20, we should be going higher, 167, then 170. So right, let's move to the next chart, which we're going to look at, which is going to be USD JPY. At a Japanese yen v USD chart, and the reason it's the other way around is I'm just looking at the CFTC net traders first of all, and they always put the foreign currency first. Now, of course, we're trading USD JPY, and we'll move to that chart in a moment. But what we want to find out first of all is how the commercials and the non-commercial speculators view the yen. And what we can see over here is buying of the commercials over the last couple of weeks, and of course the non-commercials are going to sell. It's into this 87.50 level here, which in USD JPY equates to 115. So we know that the commercials are bearish coming into the 115 level, and the non-commercials are bullish, the USD coming into 115. So we want to go with the commercials. So we want to sell into the 115 level. So what I'm going to do now is just shift to the USD JPY chart. We can look at the levels, what happened, and what we think could happen next. USD JPY daily chart, and in terms of the 115 resistance level, I've drawn it in. Since January really, we've been trading in a sideways fashion with 115, holding rallies. Now, in terms of what we know from the CFTC net traders, we know the commercials are going to come in heavily to sell into the 115 level. They've already started here, and they're going to increase their selling as we get to 115. We know this also from fundamental basis, because we're coming up to Japanese year end at the end of March, and exporters are going to sell into the 115 level and above it. So we've got the commercials on our side. We know the specs want to buy, so we want to be short. So as we come up here, we're waiting to get short, and we rally above 115. See that candle there? Fails, we finish near the lows, so we're going to come in short at 114.70. We just want to get that round number cleared. So now we're short, try and get back up on the blue candle. The red candle comes through the 115 level, but we don't make a new high, so we think that's it. We settle down, and then what we get, settle, come back to test the double trend line resistance. We go through the 20-day moving average, and then we fall below the 113 level. So 114.70, we're now below 113. Now, I didn't just hold the position and let it run through 113. Once we got into the 113 level on this candle, I bank out 50% of our trade, just in case we get a rally back to resistance. I can sell again, come in at a better price. I've lightened my exposure, or I can come in on a break of 113. So I've re-entered on the break of 113. Now, we've got this level just below 112. This tail here is significant, and then you've got 4 candles over here. That is the first target. Now, I'm looking for that target, hopefully, to be hit. If it is, and we break it, then I actually think we're going to be going down to, sorry, I'm just going to find where it is. Oh, here it is, sorry, on the left, the 106 level. And this is, the rally up here from the Trump election. I think if we break this level, we could just retrace it all. And at the moment, I see the USD JPY as a sell-on rallies. I don't see it, closing above 115 at the moment. That's, as I'm doing this video, we shall see. And in terms of the commercials alerting us to the sell, they did exactly the same when it was up at 118, and that gave us a really nice trade as well. So we'll see how this one pans out in the next few days. Euro Norwegian kroner daily chart, and I put this chart up because the weekly forecaster said I wanted to sell a spike in the euro, and it's this blue candle here at the time I was doing the forecast. And the reason I wanted to sell it was basically what you had was a double whammy in terms of news. You had bullish news for the euro on one side, bearish news for the Norwegian krona on the other. These candles up here, these 3, they started off by a weak oil price, which hurts the NOK, and then we get a rumour that the ECB might raise interest rates. That's just a rumour. Now, what we think is that you've got 2 high-impact news events, and on this candle, we should find that it exhausts itself, because everyone's come in and bought on the bullish news for the euro, and sold the NOK on the bearish news for the NOK. So it's a price spike, so it should fade back, but we've got to trade it. So how do we do that? Well, I picked down 9.15 as my level here, which are these 3 candle tops here, 2 candle tops here, that bottom where we slice through on the red. So I've got 9.15 as a level. And what happens is the red candle tries to get up. It can't do it. We come through 9.15. We try and get up again, and then we fall back on this candle. So, our view is that the buying was exhausted. You're going to see some retracement. So we've got some retracement now. And we got the option. We can take out 50% of our trade. We're now below 9,100. Lighten up our exposure. And basically, if we get stopped out in the other half, we're not going to lose anything, or we can elect to put it back in up to resistance. I'm going to decide that next week, but it's a very aggressive entry. The textbook entry is probably going to be about 9,100. I don't want to wait for that because that creates too much risk for me. Also, what I like is when these 3 bars go up nice and strongly, the stochastic blue line and red line stay apart. They don't cross at all. I've drawn a line across the top. You can't see another peak in the 6-month period. Now, in this instance, I'm only using momentum to just give me an idea of overbought, oversold. I'm not interested in using crosses in the traditional way on this chart. I'm just assuming that we're a bit too stretched. Volatility is also high. We should see some sort of retracement, which we have done. Like I said, very similar in Euro NZD. Yeah, these sorts of trades for us, yeah, they offer good risk reward, and we like to get in early. Obviously, we know the fundamentals behind the chart, which helps. So we know those two high impact news events are in to push the euro up. The buying is probably exhausted. We're going to see some sort of correction. We'll see how this one runs anyway. So that's my view of euro NOK. We'll get back after that short review of a few Forex pairs. Now, that is my view at this moment in time. Of course, it can change in line with the market action. If you want the full techniques we use to generate our trading signals and our daily analysis of major pairs and the levels we're looking at, simply click on the link beneath this video. Now, in terms of working out how discounted the news is in the price, obviously we love the CFTC net. Traders will always give you confidence, to go against the majority. Like if we take GBP USD, when we came in with our long entry, we'd had economic data that missed forecasts. We had the rumours, the hard Brexit, and that Scotland was probably going to leave the UK in the price. And then we see the commercials confirming this. Then we'll want to trade long and we'll come in with an aggressive entry. Now, I'm hoping we're going to get a decent trade in GBP AUD. Now, in terms of USD JPY, I think it could be a hard contract to trade at times because of the volatility in this pair. But in terms of the commercials and CFTC net traders positions, they are pretty good at giving clues to where prices will find support and resistance. And they vary, the commercials, in terms of how good they are, in my view, of judging a pair. And I think in terms of AUD, USD, they're very good. GBP USD, put USD JPY in that category as well. So it gave us confidence. Now, in terms of NOK, sorry, not NOK, it was Euro NOK. That pair there, obviously, we didn't use the CFTC net traders. There are none for the NOK. But whenever we see a big price spike, especially when you get a double whammy of news, like bullish for one pair, bearish for the other, we would be looking to go short in this instance in Euro NOK, and we won't look for much confirmation. What we kind of thought was that, okay, the Euro's had its good news, the Kiwi's had its bad news. That spike should exhaust. All the buying is now in, that is going to be in. We should see it naturally ease back. Now, it has eased back a bit. And by coming in with an aggressive entry, you've got a good risk reward. So don't wait around for too much confirmation when I'm doing those. Also, in terms of that sort of setup, we get stopped out a lot. But the risk reward is so good over the longer term. We find it works for us. Very often on the first try we get stopped out and have to try again. But we like those big spikes. Now, in terms of the technicals we're using there, obviously very simple. Don't want to focus on minor levels, want to focus on the major levels. And then the other thing I will always keep in mind is basically protect, okay? That's why there's always those 50-50 banks going in and out to increase or decrease exposure. At the end of the day, you don't want to lose too much. I've probably said this numerous times. I just love doing 50-50 banks. That is the video for today. I hope you enjoyed it. I will be back and update those trades and a lot more in the weekly forecasts. I'll be back early next week to do it. So thank you very much for watching me as usual. Take care. Have a good day.